Yo, what's up, everybody? Hoping everybody is doing good and things are okay so far. Things are good for everybody. If not, um, sorry, and hoping for the best. And keep trying. Don't give up in whatever we are doing. Let's not give up. Let's keep pushing. Let's keep learning. So, if you can see my chat today, you might be seeing something different. And I don't know whether you can tell from the screen, I don't know, but hopefully you've seen what I mean by different. Of course, the candlestick, no, they're not different because you're used to these, and I guess you there, you seen whatever is different. We have 2024 here. Around here, you have 2024. No, that's not the difference. All right. To those who have seen, good, and to those who have not yet seen, uh, the currency. Today we're not going to talk about gold. We're here for the Swiss franc and the Japanese yen. And yeah, that's what we're going to talk about. And I'll be telling you why I went to to the exotics. And for sure, for the first time, the exotics. For the first time trading the exotics, and not complaining. I got I think a trade wrong, and some, I guess, 5 trades right, and yeah, we good. But the same analogy we've been talking about in gold, euro, USD, the same applies over here. So before get started, I would like to inform, please subscribe to the channel, and also please tap onto that like button, so that my videos will be pushed, because currently the maximum viewership I'm getting at 66 views, and after maybe 2 weeks 66. But not bad. The journey has started, and I know we'll be growing with time, so let's get started. So over here you can see I had a trade, Japanese yen, and I'll be talking about it from the higher time frames. And for that, I don't want to delete anything over here, and let it say like that. From the higher time frames, it might be dirty, but hopefully you will get to understand why. Right, so going to the higher time frames, I guess I'll start from the weekly time frame. What I saw was let me make it yeah, as you can see, number one thing, we had this CB, sell side inefficiency, sell side imbalance, buy side inefficient. So what I saw is we have this fair value gap. I guess you can see it. It's no longer a fair value gap, because it was to support price lower, but you can see it has been used to support prices higher. So that's why we'll refer to it as an inversion of fair value gap, an inverted. Instead of resisting price lower, it supported it higher. So yeah, so I noticed this from weekly inversion fair value gap, and over here I noticed that last week closed above the consequent encroachment. So yesterday, not yesterday, the previous week closed above the consequent encroachment of these weekly inversion fair value gap. Also, these candles week consequent encroachment, so we closed above, right? And also these weekly inversion fair value gap, we closed above the consequent encroachment. So for me, for this week, I was this give me confirmation that I want to see higher prices, right? So the draw for me will be these liquidities above here, right? So this is my weekly draw on liquidities because of these inversion fair value gap. And what I also observed is we had these bullish structure whereby this low you can see was not broken by these. We have higher lows and higher highs. We have this higher high, another higher high, and higher lows as well. So these gave me the outlook that I'm expecting bullish prices. So that's when I noticed this inversion fair value gap and saw that the this candle, the last week candle, closed above the consequent, not even above, outside the weekly inversion fair value gap. So when I opened the charts today, after by the I was observing gold, but gold was so, I don't know, it's so volatile. That's what I don't say it's so messy, and because people are trading it and people are getting out money. But as for me, it was volatile. Whatever I'm expecting to happen, maybe the market would rally without me. So that's why I shifted today to try this Swiss franc and Japanese yen. So what I saw, my chart is dirty, but you can see these candles weak above the consequent encroachment. We also have this week below the consequent encroachment of this inversion fair value gap. Can you see that? Can you see that this candle's higher week, it's above the consequent encroachment, and this candle's lower week is below the consequent encroachment, meaning we have no imbalance here, meaning we have an immediate rebalance, right? Inside this weekly inversion fair value gap, we have a weekly immediate rebalance. So what I was expecting of this candle today and also from tomorrow onward this week is an expansion higher, because I've seen we have no imbalance over here that the market will draw to. We have a fair value gap from which I'm expecting to see support, to support prices higher. So that's how I read it. After I've seen the immediate rebalance, then I drop to the daily time frame, because I've drawn my buyers, or I want to see a week expansion higher. So I drop to the lower time frames, and over here you can see these market respecting the order block over here. You can see tapped into the order block, closed at around that zone. And also something that was confusing me, I saw this close below the consequent encroachment of this weekly inversion fair value gap, but since I have drawn my buyers, or I have read the weekly time frame, I wasn't that much afraid. So I wanted to see how this candle, today's candle, was behaving, right? So we have this daily order block, tap down to it, then we can see the rally higher. So inside the 4-hour time frame, what I'd seen is we have this bullish momentum, right, closing above this order block, this bearish order block that now I refer as to a mitigation block. So it closed above, also closing outside the weekly inversion fair value gap. So now at around this point, this is where I was looking for my trades. So I dropped lower to the 3-hour time frame, and I couldn't see anything. I saw this order block, right? You can see we have an order block, then we have this rally higher. So by then a fair value gap had not been created. You can see this drop lower after I had placed my trade, right? And that's why I'm always talking about my stop loss placement. You can see today it was missed by, I don't know, by a whisk. It was missed by a whisk. I don't know. It was missed by, I don't know how many pips, few pips. So over here I saw this order block, so it was also my key level. If the market will drop, I wanted to see it tap into this and rally higher. So dropping to the 2-hour time frame, that's when I spotted this fair value gap over here. So we have these order blocks also, then we have a fair value gap that had been created there, this 2-hour fair value gap. And what we can see, I didn't want to see this, but since I had read my time frame, and I had read from the higher time frames, I was comfortable with taking this trade. And with proper risk management, I wasn't that much afraid, because if you're afraid, you will not take any trade, and maybe you will not be profitable at the end of the day. So yeah, I took this trade inside this zone as it was dropping. So I'll go back to the higher to the lower time frames, but before that, you can see this candle created a fair value gap that was tapped into, then from which it supported price higher into the draw, which my draw on liquidity was this equal highs, but above it we have a fair value gap. I guess you can see this fair value gap. So my draw was this buy side liquidity, and we had a 4-hour fair value gap. So yeah, so we can see how price rallied lower, cleared some liquidities there, then retraced higher. Then we can see how it rallied higher from the 1-hour time frame. From the 1-hour time frame, what I can see is we have liquidity below here, right? Also liquidity here that was what cleared them by this week. Then we had other liquidities over here that was cleared by today. So we can see this week rallied to clear this liquidity, to sweep the liquidity below, then retraced higher. We also have a 1-hour fair value gap, right? You can see the candles closed inside the candles. These candles violated the 2 hours fair value gap by closing below, but inside this 1-hour fair value gap. That's why I'll always flow from the higher time frame to from the 4, 3, 2, 1 to my entry level. So you can see it closed. As I was observing, this gave me confidence that it's closing inside the 1-hour fair value gap after it had violated this 2-hour fair value gap. So after it had cleared the liquidity, then we can see it rallied, cleared, took our TP, then rallied even further. But we are always contented, I am always contented with 1 to 2. Sometimes it will clear the liquidity then rally lower, but sometimes it will also clear the liquidity and much further rally higher, but we are okay with that. And you can see the consequent encroachment being respected with these candles. As you can see how the consequent encroachment, the candles are closing at around that point, opening, rallied again lower, respecting the consequent encroachment. So to me, this was a confirmation that I'm not expecting to see candle closes below, right? I'm not expecting to see candle closes below, but for me it was a bullish confirmation. So sorry guys, I took that trade, and it was a good trade, and I think I took 2 trades. And let me drop to the lower time frames and see. Yeah, over here. So first I had taken my trade over here, right, inside these fair value gap. I'd taken at around this order block, right? I guess it was a 30 minutes order block. No, this 4-hour candle immediate rebalance, right? You can see this 4-hour immediate rebalance. That's when I had taken, I had placed my buy limit, but what happened, I was in drawdown for this liquidity sweep. I was in fear when the market was dropping to clear this sell side liquidity, but then I was really anticipating to see a rally higher. So after I'd seen this rally higher, I was now confident. Then again, after I'd seen this drop now into the 2-hour fair value gap, I added another trade, then risking 1%, then it rallied higher to my TP, and that's how my trade was for the day. Right, so also let me talk about another trade. It's EU JPY. My TP hasn't been hit yet, but my trade management, I guess my stop loss currently is around this level, but I've managed to take around 3 partials. So if my SL will be hit, then well and good, tomorrow I'll be also here. So let me analyze this trade also. Whew, fucking tired, man. So from the weekly time frame, what I saw is we have this liquidity sweep, right? For me, this was a liquidity sweep after I had observed also the market structure. From this market, you can see higher high, higher lows, higher high, higher low, higher high. So to me, it's a bullish market. And from this level, what I saw this candle closing above this week constant encroachment. Then yesterday, the last week, we had a drop respecting this order block, this last down close candle, but that didn't give me much confirmation, so I dropped lower to the lower time frame. So I saw this order block here, and the midpoint was being respected. Let's use, yeah, you can see how the candles were closing around the midpoint. So I wanted to watch how the lower time frames were were maybe the order flow from the lower time frames, but I spotted these imbalance over here. This candles high with this candles low, we have a slight an imbalance there, so it was my draw for the day. So dropping lower to the 4-hour time frame, what I spotted the same as to the trade I'm from analyzing. So I don't want this video to be that long, so what I saw is we have this smart money trap. To those who had entered earlier, they were taken out at around this zone. So for me, this was a liquidity sweep. Then today we had seen this candle by I guess 5 a.m. this candle had closed above this 4-hour inversion fair value gap to support price higher. I also had this, if whenever you shall see anything like a pink line, that's my immediate rebalance line, the one I'm from talking the other trade I had been taken. So this is the immediate rebalance line for the 4-hour, so not labeled there, but we have this 4-hour inversion fair value gap, which was also I was watching. So generally my, also you can see the clear liquidities above, right? These liquidities above, right? So this was the draw. I wanted to see it retrace. And remember, we do not want, don't I don't know, let me rephrase it, like I want to take a 1 to 2. I will not target, or we should not target this level, because for now the market has not tapped onto it, right? So the market will never deliver to where we want it to go, okay? Or the market will not go where we want it to go. The market will do whatever it wants to do, right? So this is the analogy. Sometimes if this was my draw on liquidity, like, yeah, just take a 1 to 2, then you're satisfied. If one could have been targeting here without taking partials, then we might see a reversal down, then it will be a trade taken out, right, or stopped out. So yeah, it's good to manage trade, and also just take your thing and go. The market will not go where you want it to go, will not go wherever you want. Hopefully I got it right. So after I'd seen this 4-hour fair value gap, it was a key level, but I dropped lower to see other confluences. Here I spotted we have no imbalance, but this 4-hour fair value gap, inversion fair value gap, paired with also a 3-hour inversion fair value gap. So nothing further, but this candle had already closed above. So dropping to the 2-hour time frames, that's when I spotted a 2-hour fair value gap. This 2-hour fair value gap, below which we had this 4-hour inversion fair value gap. So we had a drop into this fair value gap right there. Then we can see how it retraced and ended up bullish. Then this other candle closed bullish. So to me, this was a bullish confirmation or a bullish order flow after seeing also this 4-hour inversion fair value gap tapped slightly, but not that much. But the 2 hour fair value gap was to support prices higher. So I dropped to the 1 hour time frame, and after I'd seen this candle close, then I had this retracement. That's when I took my trade, and my stop loss was below this low, targeting a 1 to, yeah, let me do that. It was a 1 to 2 trade with my, yeah, around that level. That's where I'd taken my trade with my stop loss was below these this candle consequent encroachment. Yeah, I can't remember, below the consequent encroachment. I guess it's a 1 to 2 now. Yeah, so that was my trade before break even. So I did take my trade after I'd seen this candle close above this with consequent encroachment. I wanted to see this retracement lower, and from the lower time frames against, I guess, the 15 minutes, we had this fair value gap inside here. So this drop into this fair value gap, that's what I wanted to catch. And you can see how this candle tapped into it. Then we had these bullish bullish rally higher. Then a fair value gap was also created. Then after I'd seen these, and I wanted to see these to act as support for prices higher, which it did. So after I saw these retracement higher, so I trailed my stop loss to this level and taking Peugeots around this zone and also at this zone. Then I guess currently my stop loss is at around this zone. Going back and maybe check out this is the trade currently, so I'll close it because I know now. Yeah, so going back, I'm up 511 because yesterday I was at around 99 for 400. I guess today I'm up, yeah. So my stop loss is at around this zone, but you can see this market might reverse, is reversing now. So my trade management was after I'd seen this level support price, I took my purchase at around this zone and trailed my stop loss to this level. After I'd seen also this fair value gap support prices higher, I took another purchase, then trailed my stop loss to this level. Our TP hasn't been hit, but yeah, we are profitable at the end of the day. So that has been my day, and really happy for the exotics. The exotics played good for me and not complaining, and maybe we shall see what tomorrow presents. So that's it for today. Thank you for being around. Thank you for watching. Remember to hit that notification bell, like button, and also the subscribe button. So until next time, guys, be safe. Bye bye.